But here in Ghana, a lot of pressure is being mounted on the Finance Minister, Ken Ofori-Atta, to use the mid-year review and supplementary budget to deal with revenue mobilization challenges. These concerns are coming ahead of the mid-year review, which will be presented on Monday, July 29. That's a change of date from what we expected to be July 22.
We understand that the presentation is now happening on Monday due to some internal challenges with Parliament, which made it difficult for the Finance Minister to present the mid-year review on the initial July 24 date. Fiscal data from the Finance Ministry showed that government is still struggling to meet its projected revenue target for the first half of this year, a development that is impacting negatively on its expenditure. Various economists, think tanks, and the country's development partners have highlighted the need to explore some fresh revenue measures to help deal with the budget deficit. Dr. Tunamama is the IMF country representative, and he's been sharing some views on this development and how to address this problem.
Domestic revenue mobilization was still an important issue. So to the extent that the mid-year budget review can address part of it, because it'll take time to do, this will be an important. It's more growth friendly. It's growth friendly to do an adjustment through by collecting more revenues than cutting expenditure. That's a fact. I think if we want to maintain sustainable growth while also creating the fiscal space for important social programs, it's better to do it through revenue rather than cutting expenditure.
Finance Minister Ken Ofori-Atta has told Joy Business that he would use the presentation to review some of the macroeconomic targets outlined in the 2019 budget and also review some tax policy measures like the luxury tax on vehicles.
Well, so keep that date in mind, July 29 it is. Meanwhile, every Ghanaian in the country, or every Ghanaian rather, now owes 6,896 cedis. That's after the country's debt stock reached 200 billion cedis as of the end of May this year. George Affair has more on the debt numbers and other developments in the economy.
1,896 Ghana cedis debt for every Ghanaian will be realized if the debt is shared among a population size of 29 million. Some economists have argued that this could be paid in the form of taxes or sacrifice some projects to help finance these debts. The data revealed that the debt stock has increased by a little over 2 billion Ghana cedis since the last time that the debt numbers were released by the Bank of Ghana. The 200 billion Ghana cedis debt accounts for about 58% of the total value of the economy as at the end of May this year. More than half the debts were borrowed from outside the country, with the remaining from domestic sources. Development in the banking sector showed that confidence was indeed picking up, as all the indicators like deposits, loans and total assets were improving. There was also some marginal improvement in the loans that the banks fear would go bad. The cedi from January to June this year depreciated by 8.23% and in July compared to the 5.93% for the same period last year. Gross international reserve as of June was $8.5 billion, representing 4.3 months of import cover. Total earnings from export ending June was $7.9 billion compared to $7.8 billion in the same period for last year. Earnings from gold was the highest. This resulted in a trade balance of $1.9 billion.
All right, and we've got more numbers to share later in the bulletin from the Monetary Policy Committee's press briefing earlier today. We'll bring you that subsequently in the bulletin. But now I want to turn to the hospitality industry. And President of the Ghana Hotels Association, Dr. Edward Akanyameke Jr., is stressing the need for government to support training of members in that industry to improve the industry's global competitiveness. He was speaking at a workshop on customer service experience in the hospitality industry organized by the Ghana Hotels Association in the Greater Accra region for the Nigerian Hotels Association from Ogun State.
Under the heading Customer Service in the Hospitality Industry, the conference brought together members from Ghana's hospitality industry and the Nigerian hospitality industry to discuss ways of delivering excellent customer service to clients as well as generally improving the hospitality industry. Speaking to Joy Business, President for the Ghana Hotels Association said training was key in improving service delivery.
We have identified the source of that challenge, which is basically training. And that is why, as much as we get opportunity, we try to look for ways to provide such training to our members and the industry as a whole. At the moment, we are even in the program with the ILO, taking us through what they call the hospitality coaching. We are putting effort to provide training, and this is where we also count on the ministry or the GTA to support us when we request for such training programs.
Meanwhile, President of the Hotels Association of Nigeria, Ogun State, Chief Shegun Timi, called for collaboration between the two organizations in order to benefit from the Continental Free Trade Agreement.
There's no way you will have free trade and do away with the hospitality industry. There's no way. Free trade requires foreigners coming in to invest, and they will have to stay in the hotels, and you have to provide good services to them. You have to provide good facilities to them, and we have to step up our games, all right, to provide all this. That's why we want to. That's why we want to come into cooperation with the Ghana Hoteliers Association, so that at least let us do something for Ghana and Nigeria.
For Joy Business, Sheila Tamaklo reporting.
In other news, the insurance industry's contribution to GDP could overtake that of the banking sector as the lead in financial services sector. Editor-in-Chief of Integrity Magazine, Reverend Kennedy Okuson, says this can become possible if insurance companies put the right strategies in place, such as engaging the public on a regular basis. He spoke at a press briefing ahead of the Insurance Business Breakfast meeting to be held here in Accra. Bismarck Awusa has more.
According to the editor-in-chief of Integrity Magazine, Reverend Kennedy Okuson, the insurance sector's contribution to GDP outweighs that of the banks in many advanced countries, a status he believes the local insurance sector could attain in the coming year. He says a well-developed insurance industry will improve the stability of the financial markets and protect individuals and businesses from losses through natural disasters or accidents.
Our conviction at Integrity Magazine is that the insurance industry could become a bigger portfolio, a bigger industry, a larger contributor to the macroeconomic dynamics of this country than even the banking industry. And you can quote me. That's our understanding. That if the insurance industry is given the right support, if the insurance industry puts together the requisite strategies, you could have in the foreseeable future that the insurance industry will overtake the banking industry.
Reverend Okuson has ruled out the perception that there is still mistrust of the public towards insurers, indicating that insurance companies now pay legitimate claims promptly.
Perhaps 30 years ago, perhaps 40 years ago, but not in 2019. In 2019, the insurance industry in this country is regulated, very well regulated by the National Insurance Commission. And no kidding. So the room is not there, the possibility is not there to say that insurance companies take your premium, but they don't pay claims. Maybe 50 years ago, but not in 2019.
The Insurance Business Breakfast meeting, slated for 9th August 2019, is themed maintaining the fiduciary relationship between the insured public and their insurers. It will bring key players within the industry under one umbrella to dialogue on how best the level of trust and quality relationship between insurers and their clients can be maintained. Speakers will include the Commissioner of National Insurance Commission, Justice Yao Ofori, as chairman for the event, President of the Chartered Insurance Institute of Ghana, CIIG, Reverend Asante Mafo Ahinkra, as keynote speaker, and Group Chairman of Glyco Group, Kwame Ichamponche, as guest speaker at the meeting. Bismarck Awusa, Joy Business.
Now, the chewing stick until recently was an essential commodity that served as a vibrant business for some dealers. It used to be the choice for many households for brushing the teeth and also as a toothpick. Unfortunately, the commodity has struggled to stand the test of time as it's gradually lost its competitiveness to the conventional toothbrushes. Lava Films Pearl Zumabari and Michelle Boating I'll take a look right now on how the sale of chewing sticks have fared in recent times.
Chewing stick until the late 90s used to be an important commodity because of its importance. It used to be a cleaning agent for the teeth at the time toothbrushes were rare. We hit the streets of Kumasi to find out how many people are still using chewing sticks, even in the face of introduction of toothbrush.
As for me, chewing stick is very good to me because when God created man and woman, He placed them in the Garden of Eden. In the Garden of Eden, there were no Pepsodent, the varieties of Pepsodent. It was only chewing stick they chew. Adam and Eve chewed.
I use the chewing stick before brushing with toothpaste every morning. It helps me to keep my teeth clean. I bought a bunch of it. I even carry some along when I'm traveling.
Scientists have proven that when you use a toothbrush, there is fluoride and chloride, which help prevent your teeth and germs. So me, I prefer the toothbrush.
Doctors say chewing stick has several health benefits. Dr. Berta Joe is a dentist at the Komfo Anoche Teaching Hospital.
Find people put the chewing stick in their mouth and say, I'm cleaning my teeth. But honestly, they are just chewing. Yeah. There's nothing like using the chewing stick to try and clean. Every year chewing it is a different thing. Of course, you need to chew together fluffy parts, or like sponge-like thing, which you can use then to clean around the teeth. And it should be with some toothpaste of a sort, because we are not only mechanically cleaning our teeth, we want to give some strength to the teeth as well.
The commodity appears to have gone extinct with the introduction of toothbrush and paste. Demand for chewing stick has gone down drastically. Ajua Santua has been selling chewing stick for the past 25 years. She complains sales have gone down.
I've been in this business for about 25 years. Some of my colleagues have built houses from selling chewing sticks. In the past, when toothpaste and brush were uncommon, patronage was high, but things have changed now. Chewing stick is mainly patronized by the elderly. We have to travel as far as Liberia to get them.
Madame Asantua's fear is confirmed by officials of the Forestry Commission. William Barr is the Ashanti Regional Manager for the Forestry Commission.
In the 1990s, around the western Takwa area, there was one forest reserve we called the Draw River Forest Reserve. There was a lot of massive felling of the chewing stick. But these days, the intensity has gone down, either through over-harvesting or people are not patronizing it.
Some interesting report there. Well, I promise you we're going to bring you news on the MPC press briefing today, while concerns about some marginal threats to economic stability forced the Monetary Policy Committee of the Bank of Ghana to hold its policy rate. It left the key lending rate at 16%, the third time this year. George Affe has more.
Addressing journalists after meeting to review the health of the economy, Governor of the Bank of Ghana, Dr. Ernest Addison, noted that there are still some uncertainties in the market and he wants to monitor them closely before he reacts. He also added that the Bank of Ghana is so far satisfied with how the commercial banks have responded to the policy rate cuts in terms of reducing their interest rates.
I think to some extent, yes, the market is responding. If you look at the Ghana reference rate, which is really the base rate for all banks in Ghana. Just by the statistical relationship with the policy rate, you do see the movement in the Ghana reference rate.
On the Ghana cedi, the governor of the Bank of Ghana noted that the outlook is fairly stable despite recent challenges.
We all know that in February we had seen some kind of slippage of the cedi of a very significant proportion. And since February, the cedi has corrected somewhat, but it has not corrected enough to compensate entirely for that slippage in that month. And therefore, statistically, you would see that as of the 2 half-year periods, it appears as if the cedi has been weaker.
The governor maintained that the recent cleanup of the banking sector has indeed helped to restore confidence in the sector and improve the livelihood of those who saved with the commercial banks.
I believe confidence in the banking sector has significantly improved. I'm not surprised that the example you gave is of the customer of a savings and loans company, and as you know, they are waiting patiently for their part of this rescue effort to be implemented. So hopefully we will get to that very quickly, but broadly we see that confidence broadly has improved significantly.
The country's total debt stock has reached 200 billion Ghana cedis, but the governor says he's indeed worried about this development.
I don't think we should shy away from the view that there are vulnerabilities. This is really what the discussion should be about. If you have quite a bit of external debt stock and you have significant non-resident holdings of your debt, you are vulnerable to movements in exchange rate. So the discussion really should shift away from the question of sustainability to an assessment of how vulnerable are we to shifts in sentiments that can, even impact the exchange rate and by implication, the economy as a whole.
ECOWAS has set 2020 for the introduction of the single monetary currency, that is the eco. But the governor of the Bank of Ghana, Dr. Ernest Addison, notes that it might be early days yet to comment about the country's preparedness. The media budget review presented on July 29, the governor said that he is hopeful the finance minister will come up with some measures to deal with challenges facing revenue mobilization.
All right, so let's get some more perspective now from banking consultant Nana Otuo-Champon, who described the policy rates, the maintenance of the rate at 16% as prudent.
The decision is on the basis of caution. They're being cautious. But above all is the issue of the SNL, the Savings and Loan Company. It hasn't been resolved. And within the banking sector, they connect with the others. And therefore, I think the caution is predicated by this decision or the problem with the savings and loans. So until they are able to resolve that, they want to stay on the side of caution.
When I asked the question, and the governor was talking about the pass-through effect, I've seen some significant reduction and even maintenance, but I'm still yet to feel the impact in terms of cost of credit. Do you think that a lot more can be done, or policy rate is not enough to cause a shift in these rates that these banks are charging businesses?
Yeah, well, the pass-through effect, the transmission rate previously we were saying is usually slower. On the other hand, if you see that since January, we've had this reduction and maintained it from 17 to 16%. One would have thought 6 months is enough time. But the reform has also brought a lot of regulatory impetus on the banks, and therefore they are having also to be very cautious. So reducing the interest rate from around 32 to 27% is a move, but to you and I, it could be better. And so I think we got to give them a little bit more time to see the pass-through effect.
And that's Business Live tonight. There's more news on our website, myjoyonline.com/business. My name is Darryl Carl. Thanks for watching. We are back same time next week.